Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, happy Friday, everyone, as we gradually approach the end of the trading week, and of course, market participants will definitely start rounding off on their trading activities ahead of the weekend. Well, first of all, you wouldn't be seeing my face this morning as I had some technical issues trying to sort out my camera, but unfortunately that wasn't able to get sorted. But they are still working behind the scenes to make things better. But let's see if we can get things sorted out. But if it doesn't, no problem, we go ahead with our session. So once again, I welcome you all. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host as we will be delving into the financial landscape from a technical standpoint, using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory for price action today. And so I've been able to identify very simple trading setups that we will be using to both manage our existing position and at the same time use it to strategically position ourselves for the next move today. And of course, today being the last trading day of the week, it usually comes with its own peculiarity. As I did said earlier, that market participant will want to be rounding off on their trading activities, and this usually results into market participant taking some profit after joining a significant move in a particular direction. And this usually results and reflects on the chart as a reversal setup where price action moves in the opposite direction of the prior leading price action. So we shall be taking all this into consideration while we review the current market structure. So I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us. And you may be wondering what this is all about. What is it that we really do during the Forex Morning Mastery session? Well, as technical traders, we usually gather here every day, coming together as a community to engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. So this officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And for the sake of clarity, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information you gather here to make your own trading decisions and strategies. So once again, I welcome you on board and I encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiments today. And of course, we all know how important the economic calendar is, as we usually use it to pinpoint or identify correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential trading opportunity ahead during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and Japanese economic dockets. Now, so far this week, we actually do not have too much of high impactful events, so we had to include the mid-tier economic features to have a broader view into what market participants will be looking forward to guide their trading activities. Now, the most important event for this week came in on Tuesday, February 13th, where we witnessed the consumer price index, which of course is considered to be a key economic indicator that reflects the inflationary state of the United States economy. And of course, it came in beyond expectations, surprising all market participants. And of course, it was higher than the expected figure, which further emphasized that the Fed Reserve may likely be keeping interest rate higher for an extended period of time. And this, of course, resulted in a positive traction in favor of the US dollar, as we did capitalize on that momentum right there on Tuesday before the market went into an extended consolidation phase. Now, yesterday, due to the USDJPY assets on our watch list, we also witnessed the gross domestic product annualized for quarter 4 for the Japanese economic docket, which wasn't impressive at all, as the figure came in below expectations at a deficit of 0.4% contraction, which technically is inciting the idea of a recession in the Japanese economy. Remember, the previous GDP came in at a contraction of 3.3%. How we now have another contraction of 0.4%, throwing that market dynamic into an uncertainty at this particular point in time. But we are going to be looking into that in a moment, so I encourage you to stay tuned in. Now, yesterday we saw the retail sales data, which came in. In fact, it was below expectation actually. We were expecting a contraction of 0.1, but instead it came in at 0.8% contraction, which of course wasn't something encouraging at all from the United States economy. And this has already incited the idea that there is likely going to be interest rate cut again back in the month of March. So it has thrown the market dynamic into an uncertain phase right now, where we need to be very critical before making any informed decision at this juncture. Now, today, Friday, February 16th, we have two high impactful events that we will be looking forward to today. And one of them is the producer price index, which is coming in about 4-5 hours from now. And this data here is it gives us it measures, let me put it that way, the average change over time in the selling prices received by domestic producers. Of course, it excludes volatile food and energy sectors. Now, a higher than expected reading suggests potential inflationary pressure impacting market sentiment by signaling changes in production cost and potential effect on consumer prices. Now, this is another inflationary gauge which the Fed Reserve will be looking forward to following the CPI data that came in on Tuesday. Will the figure come in above expectation, below expectations, or beyond expectation? Well, whatever comes out today is likely going to be giving us more clue into the easing cycle of the Federal Reserve for the year 2024. Now, if we look at the previous data here, it came in at a deficit of 0.1%, and market economists are projecting an expansion of 0.1%, so a little bit higher than the previous data. So let's see what is actually going to happen on that particular one. Then later on today, another impactful event we will be looking forward to is the publication from the University of Michigan, and that is the Consumer Sentiment Index. Well, this data here gauges the prevailing sentiment and confidence level among consumers, providing valuable insight into potential shift in economic conditions. Now, changes in consumer sentiment can influence spending patterns, impacting various sectors and, of course, market conditions. Now, from the look of things here, if we do have a figure higher than expected, it's generally seen as bullish for the US dollar, while a low reading will be considered as negative. Now, the previous data came in at 79 for the month of January, and based on what is on ground right now, economists are projecting 80 for the month of February. So it's a little bit higher than the previous month. So it shows that there are some signs of confidence in the US economy from consumers. So let's see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then we also have some couple of speeches coming up later today, which of course will be having an effect on the market dynamics, considering the retail sales data that came in yesterday below expectations. We want to hear what the Fed officials will be saying in reaction to that data, and especially after the producer price index that comes up later today. And whatever these Fed officials say as a way of influencing the financial market, and of course their remarks and statements will provide insight into the Fed's monetary policy stance, economic outlook, and potential future policy action. So we shall be looking forward to this event. So I would encourage us all to mark out the timing of the speeches, as it will also help us to strategically position ourselves for the next move. Now, looking at the event here, we have bar is coming up in about 5 hours from now, I guess 5-6 hours from now, and then Dali is going to be speaking in about 10 hours from now or so. So I would encourage us all to mark out this timing on our calendar so that we can be on standby to capitalize on any potential move. And of course, we understand as technical traders that the anticipation of this impactful event has a way of influencing the market sentiment in such a way that there is this belief that whenever this data are going to be coming in closer to that time, those in a cycle close to this department have an idea of what the data is going to be like, and they will usually build up a position ahead of that event. And of course, this usually reflects on the chart as technical patterns and structures that we can use as trails to position ourselves strategically for the next move. So what we are going to be doing as usual is to run through the chart and look out for patterns and structures that we can actually use to position ourselves for this move. And please do not forget that I mentioned earlier that today being the last trading day of the week, there is a high tendency for market participants to start rounding off their trading activities ahead of the weekend. And considering the uncertainty of the market, where we have geopolitical tensions in the Middle East, we never can tell what could happen in the weekend. So market participants may want to be closing in some of their positions, which could result or reflect on the chart as price action doing a reversal of the prior leading price action. So we are going to be taking all of this into consideration while we review the current market structure. So I encourage you, stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And if you had not clicked the like button, please do it right away and support this channel as we continue to monitor price action. So with that being said, let's dive right into the business. So as usual, the first asset we will be taking on today, sorry, unfortunately, you are not going to be seeing my face. I have some technical issues with the camera, but behind the scenes, we are trying to sort things out. Hopefully, it gets sorted out before the session ends. So The first asset we will be taking on today is going to be the US oil spot. And so far this week, we've done pretty well on this particular asset, as we had situations where we sold at the beginning of the week. During the course of the midweek, we had we bought at some point, we sold at some point, and recently in the last 24 hours we had the privilege of buying again, scooping over 250 pips in profit at this particular point in time. So far this week, we've made close to about 600, 700 pips thereabout, depending on how many positions you took with us. Now, for the sake of those who are joining us for the first time, let's quickly run through how the week began for us in this community and what led to the decisions we made. So at the beginning of the week, it was more of a consolidation phase. Let me zoom in so we can see things clearly. So at the beginning of the week, it was more of price action trading within the range of the $76.58 level and the $76.26 area. Now, usually when the week starts like this, we usually have our key levels in place where we want to see how market participant will react to that key level to give us an idea of what we are going to be doing. And with a range like this, where price is confined within a specific resistance and support level, we usually exercise patience to wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, we did see price action trade below the support line of that range, and we did agree here on Monday that we will be selling the retest of structure. We saw the retest of structure happen. Price moved about 75-80 pips in our favor before the bullish momentum came in, and obviously we do move our stop losses when price moves significantly well, and if you had done that, you must have been taken out with a small size of profits, or at a worst case scenario, break even. Then following the buy pressure from that area, we saw this engulfing bullish candle which triggered our buy stop order above the resistance line of that range, and since that moment we have been buying this particular asset, added more positions at levels we identified during our live session, had a breakout of the $76.80 level, had the $77.20 area, and of course on Wednesday's trading session we had another one right here before the bearish momentum came in, taking us out of all those buy positions with a minimum of 200 pips in profit. Now, right here on Wednesday during our live session, we did acknowledge that this ascending trend line is going to be playing a major role in guiding our trading decisions for that day, and that as long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. And if it so happens that price action breaches and break down the ascending trend line, we will be positioning ourselves below the $77.20 area to capitalize on that bearish move. And this was exactly what happened. About 4-5 hours into the New York session, added one more position at the breakdown of the $76.50 level, and we were able to scoop in some profit on this one, as we saw price move about 150 pips on that first move and about 70-80 pips on the second move. And of course the third one did not do well as it went into a loss, so we were able to take about 200 pips on that sell move from Wednesday's trading session. Now, during our live session yesterday, we did talk about the potential that buyers may likely come in from this particular area. And if you remember vividly during our live session yesterday, we acknowledged the fact that that area around the $75.90 area has a strong memory for buying powers. And I did mention here that if we go to as far back as last week Thursday, we saw how buy pressure resumed around that area and how it had become difficult for sellers to break through that particular area. Though we saw some attempt by sellers to break through here at the beginning of the week, but we saw how it failed as we saw an engulfing bullish candle spring out from that area to further emphasize the strength of the buyers around that area. And during our live session yesterday, I did mention that we cannot ignore the potentials that buyers could come in around that area, as we saw consolidation phase happen within that phase during the Asian session stroke the early hours of the United Kingdom session. So in that regard, and with this idea in mind, we decided to position ourselves above the $76.26 area to capitalize on that uptrend move. So we saw how buyers took us out of all our sell positions where we placed the stop loss at, and then we saw the buy stop order triggered above the $76.26 level. And remember, we said we will be adding more position at the breakout of the $76.50 level, and finally the $77.20 area. And price action had really moved very well in our favor, and at this juncture it is very pertinent that we move all our stop losses and secure this current buy position, as we may likely be seeing some profit taking activity happen around this area. And we are going to be talking about the technical details as regards to why we need to move our stop loss at this point in time. But first of all, let's quickly run through the fundamentals behind the scenes that has been driving the market sentiment so far in the last, let's say, 24, 48, 60 hours from this moment. And one of the things that we saw yesterday, okay, have you all secured your position? Please secure your position right now. It's very important. Now, one of the things that resulted in this strong impulsive move we saw yesterday was as a result of the disappointing US retail data, which came in below expectations yesterday, which further has incited the idea of a potential interest rate cut as early as the month of March. However, considering the fact that we are looking forward to some Fed official speeches today, in fact, I'll be very keen to hear what they will have to say. And of course, whatever they say will give us an insight into the easing cycle for the year 2024. Now, this asset is a US denominated asset, of course, and whatever happens to the US dollar has a way of influencing the price of oil. The chances that US dollar is going to rise makes oil expensive for market participants to buy, hence reduce the demand, and the chances for the US dollar to drop when it's high, US oil will definitely rise because of the fact that dollar may like be cheap, and the US oil will be cheap enough for market participants to buy. So yesterday we saw the retail sales data come in at what was it yesterday? I think 0.8% contraction compared to the 0.4% the market participant expected. And given this data, there is a tendency that interest rate will drop, and this has contributed to the increase in oil prices, leading to higher demand for oil due to the increased activity at lower costs. Now, simultaneously, escalating tensions in the Middle East could also drive oil prices higher, as concerns about oil disruption from this region is high at this particular point in time. However, we had reports from the International Energy Agency yesterday where they predicted an oversupply of crude oil in 2024. The IEA forecast a global oil consumption increase of around 1.2 million barrels per day in 2024, which is nearly half the growth rate observed last year. Now, this projection may limit the upward potential of oil prices. Now, I hope you all seen the political play that is going on right now. Remember, I was telling you a couple of days ago about the OPEC Plus projection for the year 2024 and 2025, where they were saying that there's likely going to be a phenomenal increase in demand for oil in 2024 and 2025. And I think I was telling you on that day that I'm not buying into OPEC Plus idea, as they are known to artificially try to increase the price of oil by causing looking out for factors that will make demand for oil higher. Now, this, of course, we've seen another response from the high here from the US, saying that there's going to be high supply. So there is a political play going on at this point in time. Now, as technical traders, when we are caught within this kind of dynamics, how do we intend to position ourselves for the next move? Well, the only way we can do this is just by listening to what market participants are saying, and this of course would reflect on the chart as price action. Well, at this juncture, we can see here on this chart that as soon as price action tested the $78 area, we saw some selling pressure resume around that area, and then the price action went into a consolidation phase during the Asian session to emphasize the uncertainty going on in the market at this point in time. And this could be as a result of the anticipation of the US Producer Price Index, which is coming up later today, and of course speeches from the Fed official bar and daily scheduled for later today may be serving as an influence to put price in a consolidation phase at this point in time. And of course, hello everyone. I'm so sorry for the break in transmission. I had some internet reception issues, so I did have to switch my router to another one. So I just hope that this one will work perfectly well. I rarely use it, but let's see how well it will do for us while the other one finds its own. So thank you for staying tuned in and for your patience. All right, so we were discussing about the US All-Sport market dynamics, and we were looking at how we intend to strategically position ourselves for the next move. And in fact, in the last 5 minutes or so, we've seen some bearish traction at this point in time. So I was trying to explain to us all here how the current technical structure may likely influence the price action today. Now, remember I was mentioning about this ascending trend line, which we have been using since the beginning of the week to guide our trading decisions. Now, on Wednesday, following the surge in US crude oil stockpile we witness, of course, when there is high supply compared to the demand, price usually dropped, and we saw how the market dropped and break down that ascending trend line to the downside. And from a technical standpoint, I did mention this during our live session yesterday, that if price breaks down a key structure such as this ascending trend line, the tendency for price to come back and retest the structure is very possible to incite another wave of bearish momentum. And look at what happened here. As soon as price got into the $78 area, which interestingly shares a confluence with the retest of that ascending trend line, we begin to notice selling pressure come in around that particular area. Now, the second ascending trend line appeared to have been broken. For those of us who are part of our live session on Monday, you know what I mean. But for the sake of clarity, let's quickly look at that together here so we can see how things are looking like from an holistic perspective. Now, remember what we did here on the 4 hours time frame. That was on Monday. We took into consideration the nature of price action since the beginning of the month of February, and this was what we were able to come up with: a bullish momentum, which was further emphasized with these ascending trend lines. In fact, we had a couple of them we said we will be using to guide our trading decisions for this week. Now, as it is right now, the last 4 hours has seen price action break down this second ascending trend line at this point in time. Though we can't jump into conclusion yet saying that this is now a good signal for us to join a bearish move, it could still turn out to be a false breakdown. So we still need some further confirmation to emphasize that truly we are going south. Now, other factors that we can take to further affirm the need to sell at this point is how price action had reacted to the $78 area since the beginning of the week. Look at what happened here on Tuesday. We saw how it became difficult for buyers to continue their momentum. As every point in time buyers comes into the structure, we saw how sellers resisted their attempt and pushed price to the downside. Even when we saw this engulfing bullish candle yesterday, as soon as price got into the $78 area, we saw price nosedive again to the downside. Now, this for me is a sign that the $78 area is a very strong barrier for buyers. Look at what has been going on here since the beginning, since the later part of January too as well. So it's a very, very strong area for sellers at this point in time. So looking forward now, I will be suggesting that if price can break down the $77.20 level, we can be in for another opportunity to sell this particular market. Now, there are two ways to which we can capitalize on this opportunity. The first one is as for those of us who have been part of this profitable journey so far this week, so you can afford to leverage on some of the profits you had made so far this week to test water below the $77.20 area, so you can easily place a sell stop order below the structure to capitalize on the bearish move. And if it doesn't work, we know that we are only risking some of the profit we had made so far this week. However, if you are new with us and this is your first position on the USOILSPOT and probably you've not yet made some profit on this asset at all, I would encourage you to exercise patience and wait for confirmations like a retest of structure on the lower time frame before joining a bearish move. It could be a retest of the $77.20 area or even come back to retest this ascending trend line to incite a downtrend move. And if price continues to drop, a breakdown of the $76.50 level will be welcoming more sell positions at this point in time. So you can see how the $77.20 area is going to be serving as a major role in guiding our trading decisions for today. So let's see if the market will break down the structure. It has already triggered a sell position for me right here, and I hope it is done for you. Let's hope that price will continue in that direction. And if it continues to drop, the breakdown of the $76.50 level will welcome more selling opportunity, and a further breakdown of the $75.90 area should be having a sell stop order below it to maximize the potential of this bearish move. Now, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We try to keep our options as open as possible, hereby considering the other factor too. What is it that we want to see on this chart that will make us negate the idea of selling and start considering buying this asset? Well, for me, at this particular juncture, we have a buy stop order above the $78 area. If price can break out of this structure, well, we will be in to buy this asset. Now, there is a caveat as regards to the sell position at this point. Now, if this bearish momentum continue to the downside, please, as soon as price gets into that area around the $76.60 and the $76.50 area, kindly move all stop losses to protect and safeguard your sell positions, as we do want to see how the market is going to be reacting to this particular structure. That area between the $76.58 area and the $76.26 area is an area we shall be looking out to see how the market will react to that zone. If we begin to see buy pressure resume around that area, maybe transitioning into any form of reversal pattern, be it double bottom, inverse head and shoulder pattern, or falling wedge, we mark out the neckline and then buy the breakout of the neckline to join that uptrend continuation, as this may likely be a retracement of that impulsive move that started yesterday to incite another wave of bullish momentum. So let's be mindful of this, but trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the USOILSPOT for today. I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So I can see a couple of comments. I see you, Torres Master. Good morning to you. Thank you for your wordings. I really appreciate that. Thanks for the compliment too as well. Rory Sang says, oh, grateful. I'm very glad to hear that, Rory Sang, and trust you are doing very well out there. Jonah Aruna, good morning to you. Glad to have you around too. Then I can see Warren Barr, who says that it seems we lose out on high probability trades as we are asleep when the action happens. We have to set tight TP and stop loss. I'm not sure I understand what you mean there, Warren Barr. It seems we lose out on high probability trade as we are asleep when the action happens. We have to set tight TP and stop loss. Is that correct? I'm not sure I understand what you mean, Warren Barr. Please, I would love that you rephrase your statement so that we can all be on the same page. All right, so I look forward to hearing from you, Warren. All right. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. In fact, what an interesting situation we have on this particular asset. Remember, we were selling this asset yesterday during our live session, and we did identify a crucial zone between the 150.00 area and the 149.600 level, where we said we shall be looking out for a reversal setup, be it double bottom, head and shoulder, or any form of falling wedge to join an uptrend continuation. And look at what happened here. As soon as price action got into this particular area, we begin to notice some buy pressure resume around this level to incite the idea that we might be in to join the next uptrend move. Now, before we go into the details here and for further clarity, let me quickly share with us all how the week began so that we can all be on the same page, especially for those of us who missed out on our earlier sessions. Now, looking at the structure at the beginning of the week, it was more of price action, finding lower highs and lower lows. And after connecting the series of lower highs since last week Friday, we had this beautiful descending trend line to work with. And of course, one of the things we agreed on Monday was that as long as price remains below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling. Now, besides this, we saw that price was range bound for about 12 hours or so, where price was confined within the 149.325 and the 149.080 level to incite the idea that market participants are unsure of what will be happening. But the series of lower highs was leaning towards a downtrend scenario, and as a result of this, we did join a bearish move at the breakdown of the support line at the 149.080 area, which of course did not last long, as we saw this engulfing bullish candle spring out to break out of that descending trend line. And for those of us who were with me on Monday, we did mark out the 149.200, which interestingly shares a confluence with that descending trend line, where we said we will be buying this asset if price breaks out and retests that structure. And look at what happened. Price retested that structure, and since that moment we have been buying this asset and added more positions as price continues to find new highs. And in fact, we saw this engulfing bullish candle which came in following the US CPI data to give us about 180 pips, I think, from two buy positions. Now, on Wednesday's trading session, we begin to notice that the bullish momentum has been stalling as price action was confined within a range and had been finding series of lower highs. And one of the things we said we will be using to guide our trading decisions for that Wednesday session was this ascending trend line, which was our major trend line as at that time, and that if price will break down that structure, we will be positioning ourselves below the 150.400 to capitalize on the downtrend move, which was exactly what happened. We saw an engulfing bearish candle break through that structure. And during our live session yesterday, I told us all that for everyone who took advantage of that bearish move should ensure that they move all their stop losses to secure that current bearish move, as we may be looking out for another wave of bullish momentum. And to help us position ourselves for any bullish opportunity here, we considered this impulsive move and said that this old bearish momentum we notice here may likely be a retracement of that impulsive leg, and to position ourselves for any potential move, we use our retracement tool and then run it through the impulse leg and had our golden zone area marked out between the 50 and the 78.6%. Now, with this situation here, we have look at what happened here the last Hello everyone, sorry for the break in transmission. I hope we are back online, and I hope we can all see my screen and hear my voice clearly. Okay, so we were discussing about the USDJPY asset, and we were considering how we will be taking advantage of any opportunity today. And I also went on to talk about some development. Now, Could this serve as a potential signal to participate in a continuation of the uptrend? That is the first question we need to be asking here, considering the strength of the US dollar at this point in time and the uncertainty surrounding the pivoting from the ultra loose monetary policy by the Bank of Japan as early as the month of March. Well, the technical structure will definitely give us an answer, as it usually tells us how the market participants are thinking at any particular point in time. Now, with the situation we have here, I want to readjust this one so that I can capture all the pivot lows here. Now, with this current structure we have on the 1 hour time frame, it is quite clear that the market is looking a little bit bullish. Now, we have this ascending trend line which we identified yesterday, and I just readjusted it to capture all the pivot lows on this one. So we have the first one right here. Price found on sorry about that. Okay, so we have the first pivot low here, we have the second one right here, and then we have the third one around this area, we have the fourth and fifth one somewhere around here. So price has consistently and uniformly respected the ascending trend line, and you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. Now, following yesterday's trading activity where we saw a potential reversal pattern just exactly within that demand zone we identified, which interestingly shares a confluence with the ascending trend line we just readjusted right now, I'm of the opinion that price action has a high chance of continuing the uptrend move. Now, with the situation we have here, we have price action break out of the neckline, and for those of us who saw my commentary this morning on both my TradingView and Telegram platform, you must have had a position triggered at this particular point in time. So please, let's ensure that we have enough breathing space for our stop loss, as we never can tell, some volatility could happen today. So way below the support, the ascending trend line makes quite a lot of sense. So we could have between 30 to 40 pips stop loss on this particular one, and then we shall be looking out for more opportunities to buy at the breakout of the 150.400 level, and of course the 150.870 area, which happens to be the highest point price action has been for the week. So let's see how far this momentum will go. So on the USDJPY, I am holding on to a bullish bias on this particular asset. However, if sellers try to come into this market and we start seeing signs of selling pressure come in, I will definitely give you updates on both my TradingView and Telegram platform. But at this point in time, I want to maintain a bullish bias. Now, bearish bias may come at the breakdown of that ascending trend line, and in fact, I would like to see a retest of it before I can start considering selling this particular asset. So let's see how the market will play out. We have a buy position triggered right now, and let's see how far this momentum is going to go. So this is my simple view on the USDJPY for today. I hope I made myself very clear, and if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So because of the limited time I have, I will be taking the next 5-10 seconds off to see if there are any questions before I move on into the final assets on our watch list for today. Hello everyone, kindly give this video a support. I can see over 12 people on board and we only having 7 likes right now. We can do better than this. This is the cheapest way we can actually support this channel to grow, and thank you very much as you do so. Now I see your comment here. I think I see a couple of comments I see one from Rory Sang Sekilo. Rory Sang says here that in order to trade commodities comfortably, how much would you advise me to fund my account? Well, that's a beautiful question. First of all, I am an advocate for having a huge account size, that is at least considerably huge account size. And another thing you also want to take into consideration is the fact that you can lose this money you have. So it now depends on your risk tolerance. How much can you afford to lose? How much can you afford to lose? Because you have to keep that in mind, that just in case the market does not do what you want, if you lose this money, are you going to be comfortable with it? I hope it's not your life saving. So these are things you need to consider too as well. Now, for me, if you would ask me, I would say that you should, at most, the minimum at most should be $1,000. Now, with such amount, $1,000, $5,000, $10,000 account, you can better manage your risk. It allows for more flexibility in setting stop loss and take profit levels, ensuring that each trade's risk is a smaller percentage of your portfolio. Now, this is related to your position sizing, of course. And it could also serve as a buffer for your drawdowns, where Forex trading, of course, involves volatility, we all know, and there will be losing trades, of course. Now, with an account of a minimum of 1,000, it provides more substantial buffer for drawdowns, helping you withstand market fluctuations without wiping out your account. So these are things that I usually consider before I advise people to choose a particular portfolio size. And of course, with experience, you get to understand the dynamics surrounding the emotional impact of gains and losses, and give you a better understanding of how to manage your emotions during different market conditions. So for me, I will just say minimum of $1,000 is the minimum, is the least I can go for comfortable trading in the financial market. And most importantly, I usually consider risk management and position sizing and the ability for your account to buffer for drawdown. So I hope I answered your question, Rory Sang Sekilo. I tried to make it as short as possible. In fact, I have a very lengthy idea on what I think and what makes me support that idea. But I hope what I said so far has been able to bring more clarity into your decision making as regards to that. All right. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD. I will say that the XAUUSD is the most profitable asset on our watch list for this week. As you will see, we've had situations where we bought, we had situations where we sold, and in both instances, price moved significantly well in our favor. And the most profitable moment was Tuesday's trading session, when we had 3 positions triggered at the breakdown of the 2025, where we had our stop losses, sell stops, $2022 level and the $2013 area, riding that momentum all the way into the 1985 area before this bullish momentum began. And of course, during our live session yesterday, we did acknowledge the fact that price action has been confined within a range to emphasize the prevailing uncertainty in the market at that particular point in time. And of course, you know how we use our ranges in this community. When price action falls into it, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And one of the things we noticed within this range was the fact that price action, despite the strong bearish momentum, we were noticing higher lows here, which resulted in this ascending trend line we identified at this point in time. And another thing that also buttressed a potential reversal here yesterday was the fact that we were seeing something like a head and shoulder pattern, though it's not precisely it, but it's close to it, where we had the neckline sitting at the resistance line here at the $1,995.50 level. So with this scenario, we were keen to join an uptrend move, and we said we will be positioning ourselves right above the $1,995.50 level to join that uptrend move, and this was exactly what happened. And in fact, if you missed out on that opportunity, we can see how the market came back, retest the structure, and since that moment, price action has been climbing higher lows. So at this point in time, for those of us who capitalize on this opportunity, you will currently be running with a minimum of 95 pips in profit at this particular point in time. Now, it's high time you moved all stop losses right now. Let's secure this current position, as anything could happen as market participant anticipates the macroeconomic features from the United States today. So anywhere around the $2,002.50 level and probably the $2,000 area makes quite a lot of sense to move all stop losses to, while we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? How do we intend to plan and manage our trade on this asset? Well, if you would ask me, technically, from a technical standpoint, the current bullish trend seems to be holding strong, with price action trading and floating above our ascending trend line. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above it, we will continue to look out for patterns and structures that support the idea of buying. However, it is important to also consider that the further upward movement in the gold price is uncertain due to the US dollar's recent recovery alongside the recent uptick in the US Treasury bond yields and a cautiously optimistic market sentiment. Now, it is advisable, like I said earlier, let's secure all buy position. And during the Asian trading session, we saw continued consolidation phase somewhere around here, giving us something that looks like an uptrend continuation pattern in the form of an ascending triangle, as you will see right here. And usually whenever we notice an ascending triangle on our chart, it more or less tells us that this may likely be an uptrend continuation scenario, where we shall be waiting for the breakout of that resistance line to trigger another wave of bullish momentum. And as at this point in time, I already have a buy position triggered right now. As you will see, price action broke out of the $2,005.50 level, which happens to be the resistance line of that uptrend continuation pattern. Now, following the disappointing US retail sales report from yesterday, there are speculations that the Fed might consider rate cuts as early as the month of March again. And if there is likely going, if this speculation holds water through the course of today's stroke next week, we might likely see gold rise to the upside, and we should be position ourselves in such a way that we can capitalize on that opportunity. Nevertheless, we cannot still ignore the robust US consumer inflation data that came in on Tuesday, which of course reveals the sticky inflation in the United States. And we're looking forward to the producer price index today to help us gain further insight into how sticky the inflation is in the United States. Then we also heard of the hawkish comment from the Federal Reserve official Raphael Bostic yesterday, where he said that the Fed could delay any policy change until the June meeting. Now, this has thrown in a level of uncertainty into the market dynamics. Now, despite this mixed reaction, concerns over rising tension in the Middle East could provide support, and in fact, buyers can take succor in this escalating tension in the Middle East to continue to buy this asset. However, if we look at this from the weekly perspective, this whole bullish momentum could be a retracement of the bearish impulsive move we saw at the Tuesday's trading session. So now the question at this point is, how far will this momentum go? Maybe to incite another wave of bearish momentum to the downside, or is it just going to continue to the upside from here? Now, to help us guide this decision, we have some couple of levels here that we will be using to guide this momentum. So we have the $2013 area, where if price gets close to that structure, kindly move all your stop losses on buy positions, secure the current one, and let's wait patiently to see how the market will react to the $2013 area. If it gets into this area and we see that buyers are finding it difficult to break through, resulting in continued selling pressure around that area, it could incite a downtrend move. So let's be very, very mindful of what goes on when price gets into that area, so we move our stop losses accordingly. However, if price breaks out, well, that will welcome more buying opportunities. But as soon as price gets into the zone between the $2027 and $2022 area, please, let's move our stop losses again, secure the current buy position while we wait and see how the market would react to that zone. So this is how we are going to be managing our positions today. I hold on to a bullish bias as long as price still remains above this ascending trend line. So of course, we will be in the XAUUSD live window later during the New York session, where we shall be monitoring real-time price action on these particular assets together. And I already have the link right in the comment section, pinned at the top of the comment section. You can click on that link, click on the notify me button so we can get notified as soon as I come on live. And it usually kickstarts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours, depending on the intensity of trading activities for that particular day. So let's see during the XAUUSD live window to continue monitoring this asset for today's trading session, as of course as market participants gradually round off their trading activities for this week. So maintaining a bullish bias here, and if it so happens that price drops below this ascending trend line, this could welcome selling opportunities. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the XAUUSD for today. I hope I made myself clear. If you have any questions, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 5-10 seconds to see if there are any questions while we prepare ourselves to for the London and New York session today. And please, okay, I saw some increase in the likes. Thank you very much, guys. I really do appreciate your support in helping this channel to grow, and I look forward to more of your support in the nearest future. Thank you very much. And for those of you who are yet to like, I'll really appreciate that you click that like button. This is the cheapest way you can actually support the channel. Your likes are very, very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much as you do so. So let's see if there are any questions, then we shall be moving into the end of the session. Thank you. All right. I see your comment here. Torres Master, thank you very much for your feedbacks. I think it's up to like 11 right now. Probably you refresh your page. I was thinking the same thing too as well. Michael Zaye, good morning to you, Michael Zaye. Trust you're doing very well. I guess you're new with us here. Glad to have you around with us this morning. Now, Michael Zaye says that, oh, that's great. That's great. That's great. Glad to have you around with us. And you said, what else did you say here? Okay. I'm impressed by your analysis. We present very exciting and high quality. All right. Thank you very much for your compliments. I really do appreciate them. Please tell us about your mentorship. Okay. Well, I offer a one-to-one mentorship program for traders who already have the basic knowledge of trading, technical analysis, and they're finding it difficult to consistently become profitable. So these are the kind of people I work with, help them to bring out the better version of who they are. So I'm not here to impose any knowledge on you, but instead to try to understand what you do and use that knowledge to bring out the best from you. Drop those things, those habits that are not good for you, and then include some habits that are good for you. And of course, personalized guidance. Get one-on-one access with me every day. I stay with you, providing you insights and strategies and tips crafted just for you based on the knowledge I've gathered from you. And then tailored learning too as well, and real-time feedback you get from me on a daily basis after having in one-on-one correspondence where you can talk to me in real time during live sessions, during trading sessions, New York and London session basically, and of course help you in tracking your trading goals through regular check-ins and goal setting sessions, which runs during the course of the weekend in preparation for every week. We do analysis together and see how we plan ourselves for the week, and also whatever trading decision you are making, I need to always approve them before you execute them on the chart. So that means that you would always supply me with your trading plan, which of course I will give you a template which you will work with, and I will vet them and confirm that okay, fine, this is good for us to go. And if it is not good for us to go, I'll let you know why we are not going with it, and then probably do some other change. So this is basically what we do during the one-to-one mentorship program, and that's simply what we do basically. So I hope I made myself very clear. Okay, great to hear you are available through the US session. How do you detect a trend line? Well, be part of our subsequent editions and you will get to understand this over time. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use them to make your own independent trading decisions. So very much glad to have you around, Michael Zaye. And on this note, I would like to say that we have come to the end of today's Forex Morning Mastery session, and for this week as well. It has been a wonderful moment with you guys. I really enjoyed the energy in the room, despite the fact that we had temporary break sessions due to internet issues, but we stayed tuned in, remain patient, and be part of the session. That's wonderful, and I really appreciate that. So far today we were able to take on the 3 financial assets on our watch list, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And I do hope you all marked out these levels as we illustrated during the course of the session. If you did, well done to you, and we look forward to seeing what today will bring for us. And please just exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, let's ensure we have a well-defined risk management strategy in place so that we can mitigate against any risk if market goes against our particular direction. For those of you joining us for the first time, I do hope you gained one or two things today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand, comprehend our analytical approach, and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review our assets and prepare for the new week. And if you haven't subscribed already, please do right away, because I will be sharing my videos and plans for the new week right on this YouTube channel, so that you don't miss out on it. Subscribe and click on the notify me button so you can get notified as soon as I drop my videos. So it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously. Do have a wonderful day and wonderful weekend too as well. Bye bye.